If we look at the volatility side of things, huge spike in realized vol, obviously. So you can see here, we got as high as 130 on the 10-day, on the 7. Oh, sorry, on the at the money, we got as high as 130. In terms of the realized vol, that's kind of just shifted higher to about 110 in Bitcoin. If we look at Ethereum, that doesn't show the intraday. The intraday got as high as 200 in terms of the weekly volatilities in Ethereum, and that realized is sitting at about 150 right now. Okay, so Ethereum exhibiting a little bit more beta to the downside, as you would expect, because when the liquidity within the altcoins disappears, then the only liquid alt outside of Bitcoin is Ethereum, and that's the thing that's being used by people who just need to get some hedges on and get some vol on the books, basically, right, against some of their holdings. So Ethereum tends to kind of over spike because that's where the flight to liquidity is against altcoin exposures. So carries obviously flip negative. You can see here a pretty large lumpy amount in the order of magnitude of minus 30 to 40 vols. That's not very typical for us to see such a high realized above implied level. Obviously, implieds have eased back a bit from their initial spike, given that markets stabilized over the last few days, but realized is going to take a bit of time to work that through. Obviously, we look at a 10-day realized metric, so having those monster moves in there, we're going to need a week or two for those to drop out. Now, we do expect markets to remain choppy and illiquid, given how dramatic the events have been. So I don't think the realize is suddenly just going to go back to what it was, where we had realize in the 30 to 40 range for Bitcoin. Now, GEX models, and we obviously look at the GVOL, which has now become Amberdata. We look at their GEX model. They're basically saying on Bitcoin between 15K and 17K, it looks to them like the dealer community is short gamma. And that would make sense given that short dated protection was bought when we broke. And if you're an owner of that short dated protection, you've either already taken profit on it most likely, or you're keeping it because you need it against other longs, right? So we think that dealers probably are short around here, and that's another reason why we think markets are probably going to stay a bit choppy, even though for the last 2 days they don't seem to be moving too much. If we look at term structure, so obviously we've got a big inversion. Not as big as it was. It's faded back down a bit, but we've got a pop there. We got a pop there in Ethereum. So both curves flipping to inversion, as you would expect on that sort of big realized sort of move down. Back end vols are actually up quite a bit as well. So we look on the week, we've got nearly a 10 vol move in the back end. And when I say the back end, I mean the 6-month part of the curve. So when you see when it's not just the front that's going crazy bid, but the back goes up 10 vols as well. That's because people are thinking, well, this uncertainty that is driving this weakness is actually going to persist for quite some time, and we're not going to know, the true fallout. I mean, if you think about Luna, what happened with Luna and 3AC, well, the reason why FTX was in a pickle was because of that, and we only found out 3 months later. So the question is, what are we going to find out in the next 3 to 6 months? Has on the back of what we've just seen with FTX, who's going to go pop? Who's gonna basically suddenly have skeletons in their closet in 3 to 6 months' time? We don't know, and that's going to keep a bit of a lingering bid to the long end of the curve. Also, bear in mind that now that regulation is likely to come in, and you're going to get more potential bad headlines coming from whether things are considered securities, what type of hoops they're going to have to jump through, and things like that. It's all going to have a pretty negative drag. And then the question is, what are they going to do to the DeFi space? In theory, this is all a problem with centralized finance, CeFi. It's not a problem with DeFi. DeFi is doing what it's meant to do. This is something Jim Bianco's been talking about. But if they use this as an excuse to attack the DeFi industry and the crypto industry as a whole, which is probably what they're going to do, then that's a problem, because really DeFi is doing exactly what it's meant to do. Okay, now let's move on to SKEW. So it shouldn't be a major surprise that SKEW absolutely exploded. So you can see here, SKEW briefly, literally the week before the crash, SKEW went to zero and actually flipped slightly for calls, which is you can't make this stuff up, right? It's ridiculous, right? So it went through zero there, touched zero in Ethereum. So sorry, Ethereum's in the yellow, Bitcoin's in the green. That's 1 month, that's 3 months. So both on a 1 month and a 3 month basis, it went back to zero, if not slight call premium. And now it's absolutely exploded. Ethereum touching 40 vols for put premium, which is unbelievable, and Bitcoin touching 30. Now they have faded somewhat. They've definitely given some back as markets have stabilized, and the kind of fear of just like a free fall has kind of subsided. But the reality is, this stuff can just turn on a dime, right? Like some new piece of news comes out that, oh, crypto.com or this person or that person, whoever it is, has gone pop, someone else has gone pop in the industry, then we could see this SKEW spike again, and we could see the market shave another quick 20% off. So I think we're in a precarious spot, and I wouldn't get too excited about the fact that SKEW's pulling back, because think where it's come from. It's come from zero. Even after pulling back, it's still at 20 vols for puts, which is still a significantly stressed state that we need to respect, basically. Okay. Yeah, that's kind of it, right? And I think SKEW's going to be holding a bid for some time, because these credit events just keep coming, right? So I don't see put SKEW. Now that we did touch zero briefly, I think it's going to take quite some time for us to get back down to zero on SKEW, right? You're going to need some serious bullish catalysts and reasons to think this market's going to go up again for it to happen, right? Even if we get a sharp rally on short squeeze, I don't think the SKEW is going to reprice completely, because we will not, certainly not in the 1 month. In the 1 week, anything can happen, but in the 1 month to 3 month part of the curve, I think put SKEW is going to have to persist for a while. Looking at the individual dashboards, just echoing what I've already said, but it's good to just have a quick look. So you've got 20% down on spot. Obviously, vols up 25 vols. It has drifted a little bit overnight, so it's probably closer to 75 in the front month. The carry indicator, as we already said, looking at minus 30. Look at some of these monster moves: 10%, 15% down days, and then up 10% day. So it's those three massive days that are keeping that realized vol well above 100. Obviously, once those days start to drop off, if we don't replace them with some more crashing, then markets can start to heal. And you can see the term structure inverting violently there, basically. One thing I forgot to mention was the vol spread between Ethereum and Bitcoin. So you might be surprised to hear that that's actually flattened a bit. So a week ago, that was at 30 plus in the front end, but it's actually come down. So that spread's about 20 vols now across the curve. And the reason being is because Bitcoin is actually participating in the sell-off. So before, you had Ethereum's a high beta thing moving, it moves a lot more. But even though the 10-day realized is still above 30, as is the 30-day, this spread has compressed to 20 vols because Bitcoin vol suddenly did spike because Bitcoin did participate in the sell-off. Now, I do think on the long term, if we look at where the long term is, and that's in the green here, we're at about 17 vols, 18 vols. If that gets below 15, then I think that starts to present some value, because I do think Ethereum is just a more volatile animal. And so owning 6 month vol at 15 vols over Bitcoin and just parking that in the book to be able to benefit from these outsized moves, I think is probably still an okay trade. Yeah, so I'm going to be watching that to see if it's worth getting into that spread. I haven't done anything yet, but I'll be keeping my eye on it. Okay, if we then have a look at crypto option flows, what did we see? So as markets melted down, we saw some profit taking in these November in the money puts, because we did see a load of put buying come in. So, the stuff that went in the money, so strikes basically 18K and above, started to see some profit taking on those and some rolling down. And you can see that via these this gravity chart here, right? So you can see 18th and 25th of November are the expiries here. And you see a lot of red dots in the strike zone of 20 to 18K. So these red dots are basically signifying that we're seeing sellers of those puts. And what are those people buying? They're either buying put spreads, which is signified here in the same expiry. They're buying puts lower down. So they're rolling down into puts and put spreads of lower strikes, or they're rolling out into December expiries, again, looking at put spreads type structures here, basically, right? So generally, when you buy a load of vol and it's quite cheap, you just buy outright puts. When those puts suddenly go in the money and you've had a big move, that obviously comes with a vol spike. So then if you want to take profit and roll that stuff down, you're not necessarily just going to roll it down to outright puts, because those puts are trading on an expensive vol. So then you tend to buy put spreads as your next play to maintain your short but not take too much Vega risk, right? So what we saw was Deck 22 put spreads trading in reasonable size in the kind of 15K strikes to 10K strikes. That's kind of the put spread strike that was the largest trade last week. And obviously they're selling out of their in the money stuff, more local. And then actually there was some call interest. So you can see here 22K and 24K calls were bought in March and June for next year. Not in massive size. You can see the volume's not as high as it was on the put side, but some people bottom fishing via calls, and that's the only safe way to do it, right? When the SKEW goes exceptionally bid for puts, then it means the calls are trading at a reasonable vol level. They're not elevated really. And spot has dropped by so much that you're saying by next March or June, this could all blow over and maybe markets are in a better state. Maybe we've actually got confirmation of a Fed pivot and we're back to loose policy, then maybe this stuff can recover. So people trying to bottom fish via longer dated calls for that potential scenario. If we look at the Ethereum flows, similar, puts dominating for a change, because normally it's calls that dominate in Ethereum. Obviously, liquidity on Solana options just evaporating to zero. So people being forced to do any hedging they need to in Ethereum. It's the only liquid place, really. Protection was being bought in November and December. November 1,300 puts, December 1,000 puts were the strikes that really were the blocks were going up in. And then you also saw a December risk reversal in good size go up as well. The 1,300, 1,800 risky, which again would have been, I don't know if it was zero cost, but it wouldn't have been too far from zero cost, I imagine. I was doing December risk reversal myself before the market crashed because they look quite attractive because the SKEW hadn't exploded yet, right? So that was the idea. A hell of a lot going on in crypto over the last week. It's been an exciting place. Hopefully you didn't lose your shirt. I have been warning you for a very, very long time to be hedged and to be on the lookout for this break lower. So hopefully you listen to me, and I'll catch you all guys. I'll catch you all next week. Thanks for listening.